please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Let's, as Surabhi pointed out, get back to talking about Yes Bank. The stock is down. The key man risk, so as to speak, has come true. Mr. Rana Kapoor, a limited extension from the RBI, and the board is meeting, I think, the coming Tuesday to discuss what to do. Munish Dayal from Bearing Private Equity Partners is joining us to talk about this. Munish, thanks very much. Appreciate your time here. What would you make of this entire situation, top down? So for the bank, what would it mean? And we'll then later maybe talk about whether does the RBI need to disclose more, because investors right now seem to be. We know that Mr. Kapoor is only there for another 4 months or so, but the fear is that there is more than meets the eye. So maybe the RBI needs to tell us more. But start with the bank first, Munish.
Yeah, so Prashant, I think you rightly pointed out it's a mix of two issues. The first one is the key man risk, but to my mind, that's not a new risk, right? Rana started this bank 14 years back. I think over the last 14 years, he's built a very solid bank and has been one of the largest wealth creators in this space. And if you just look at standalone the bank today, Yes Bank has one of the best ratios and profitabilities in the country today. So with a NIM of 3.3%, ROA of 1.6%, NPL ratios at 1%, Tier 1 capital at 14%, it's amongst the top few most profitable and high-growth banks in the country. So as a franchise, I think it's been an incredible creation of a bank by the promoter, who continues to be a fairly significant shareholder, apart from being the managing director and CEO. Now, really, the question is, should he have continued for another 3 years, or it's 2 years, or is it 6 months? And it was an imminent change of management in the bank. Now, maybe the RBI, through its prudence, has accelerated that process. Coming to what could happen next, will the successor be from within the bank? Will it be someone from within the industry? I think the bank itself has a fair bit of bench strength and talent within it. And I think the market itself would have a lot of contenders to run a very strong platform in the private sector bank area. I think the market is reacting to an event due to the uncertainties you pointed out. And the biggest uncertainty has been the way RBI has actually confronted this issue. Is there more on the compliance side and governance side, or is it just that RBI has suddenly woken up to the fact that it needs to play a role in the key management positions in all the banks?
Munish, as a long-time participant in financial markets, Munish, what is your own sense? Someone who's watched the industry over the decades, what's your own sense? I mean, how should investors really see this, what the RBI has done? Some things are unknowable at this stage, right? Is there more hidden which will come out later? That's the fear. But how would you see it if I were to put that question to you? So,
if you put it to me, I think it's a great franchise. I think it's one of the better-run banks in the country. And it's a platform which can be significantly grown and will acquire market share. I think the event should be looked at as an opportunity to get a new management team or an MD and CEO. And at the same time, I think one should acknowledge the work Rana has done in the bank. So I don't see this as a negative for the bank as such. I think just the way it's been done and the timing and the short time frame in which people need to react to this event has taken everyone by surprise. But, you know, for a private sector bank in this country with this capital adequacy and profitability and the franchise itself, which is very high quality and very highly rated by all rating agencies in India and globally, I think it has a good long-term future, and I would, look at it from a long-term perspective at a decent buy to evaluate.
Munish, morning. Surabhi here from the Delhi studios. I take your point, but the question is that the fact that we don't know, the market doesn't know why Mr. Rana Kapoor was forced out by the RBI. Is that fact going to weigh over the fact about, superior return ratios, high profitability, etc.? So is this going to continue to impact the stock performance from here on till perhaps, if at all, the RBI decides to make more disclosures?
So, Surbhi, again, the convergence and all the earlier disclosures that the bank had to make based on what the RBI had requested the banks to take provisions on. If the RBI is taking action today on events which have been unfolded in the last 1 year or so, right? I think those have been disclosed to the market, and is this the way RBI is trying to communicate to the market that, listen, if you are in charge of a financial institution and we had to tell you how to disclose your NPA, it's an industry-wide issue. I think every bank in the country was impacted by it, and it would be unfair to isolate Yes Bank. On the other hand, if there is something which the RBI knows more than what has been disclosed to the market, then I think it's very prudent for RBI to get out with those facts.
But Munish, just a quick follow-up on that, I think this issue of divergence, that the manner in which Yes Bank was looking at its loans and the kind of NPAs they were declaring vis-a-vis what the RBI thought should be declared, has wide divergence perhaps led to this? Therefore, could that be a bit of a sticking issue before the stock and shareholders can get back on the recovery journey?
So the divergence issue has been well disclosed, well documented, and the stock and the bank has been adequately punished by the market for it, right? It was at 400, it's at 250. So all I'm trying to say is that's a disclosed issue. Now, if you're saying that the RBI thought X and the bank did Y, and hence we need to punish the person who was running the bank, yes, and then they should communicate that. Now, I guess what the market is always circumspect about is uncertainty. Is there something more which is unknown to the market? Because if what is known and what has already been factored into the numbers and balance sheet and profitability of the bank, it still continues to be the most amongst the most profitable banks in the country. So why fear that?
Okay, Munish, I have a two-part question. Part A, you began by saying that the market is reacting, partly the way it is reacting because of the way the RBI has sort of, the timing of it, the way it has been done, etc. What would you have liked to see from keep the bank aside, from RBI's perspective? I mean, the way how should this have been handled in your view?
Listen, if the RBI has data or information of wrongdoings in the bank, I think through its inspection reports, through its disclosures, it is equally their responsibility to disclose what is wrong in an institution if there is, right? If there is none and they are forcing change in management of the bank due to events which have taken place earlier, I think they should do that and say it, right?
Yeah.
There's nothing wrong in saying, listen, there was a divergence issue. We believe that's not the right way to handle it. We are not going to reward or allow continuity with management teams who made that happen.
Yeah.
Right? And I think that's fair.
Yeah.
Right?
Fair enough. Fair enough. Munish, just as a disclosure, I mean, do you or your scheme own the stock, Yes Bank? I mean, just...
the fund I work for doesn't. I personally do.
All right, Munish. Thanks very much. Appreciate you joining in with your opinion. Useful and good to hear a balanced perspective on this entire matter. So that is yes. It's still, I mean, some 30-35 rupees off the low. It was down 30% plus at one point, and it's come up and now down a little under 20%.